Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome back, Zep.
How's it going, Brandon?
It's good, but as always, none of this is financial advice. Use it for entertainment or educational purposes only. So we have a lot of exciting stuff to get into today. It's been a little while since we've done these like all-encompassing weekly updates. We have Shayne coming on. He's going to be talking about real-world asset tokenization. That was actually in a Twitter space, but there was some gold in there that I wanted to make sure that we got out. We also have Shark Bites going on. Rob answers some more questions from the community. We want to talk about Hedera Defi and the HBAR economy because we have some tokens that are really taking off, and we just want to talk about that a little bit. But before we get to all of that, while we were off, I think right before I left, I covered that Charles was announced as the new president of the Hedera Governing Council. Perfect fit, in my opinion. And he's already done a couple interviews. He did one with David Berlind of Blockchain Journal, as well as Zenobia. And I think they were talking to different audiences, right? Corporate audiences, things like that. And I just wanted to get him on to talk directly to the HBAR community. So I got him on for this. I think he did a great job. It's a fairly short one, but it's pretty punchy. So listen in. Today, we welcome Charles, the new president of the Hedera Governing Council. One of the things I've noticed is how he's been very engaged on social media. So, Charles, I want to welcome you not just to the Hedera ecosystem, but to the Hedera community as well.
Yeah, thanks so much for having me. It's a pretty robust community and everyone seems pretty excited. And so I'm glad to be a part of it.
Absolutely. All right. So just to kick this off, Charles, you've been involved with a couple crypto networks, including Polygon and Aptos. What were your top motivations for making that move and joining the Hedera team?
Yeah, it's interesting. I think, both of those organizations have great technology as well. I think they're on the right track. I think they've just started a little bit later and with a little bit less focus at a broad scale than Hedera has. I've actually known about Hedera for several years, actually pre, mainnet. So before 2019, I've known and followed Hedera for quite some time, and I've always been interested in the organization. So I've always kept track. I saw the opportunity kind of come about, 6 months ago or so, and so I've just kind of been tracking into this position, ever since then. So yeah, it's exciting to be here. I would say that the enterprise focus is very interesting. I know now we're moving a little bit more into some of the consumer use cases. It's really building that tooling that makes things easier for the individual to build on the Hedera network has always been really important. I think from what I'm seeing, we're just starting to really, take a foothold into that. So that's really exciting.
Well, we're certainly happy to have you. Charles, as mentioned, you've been very active on social media since joining. You have experience with marketing some pretty big brands, and you've had those leadership positions on large Web3 teams. This seems like the perfect mix to help raise awareness for Hedera, its tools and capabilities. Do you have any plans on how to increase Hedera's mind share within crypto and beyond?
Yeah, I think one of the things that I do have an advantage with is having that background in communications. I think being able to talk to more people at scale, being on shows like this is super helpful to get awareness out there to the broader community. But also just understanding that I've been in highly regulated environments and doing communications in that. I think there's a lot of protocols out there. They shy away from doing really extensive marketing because they're a little bit unsure on what they can say, what they shouldn't say. Luckily, I have a pretty strong background in that, and I've had some pretty good guidance on how to make those communications within guardrails and do so in a strong way. So that's always been helpful, is just having that professional background in communications.
Yeah, it's a good tool set to have for sure. So you mentioned on an X post that in 2024, there's but one rule: we don't play games. Can you explain what you meant by that?
Yeah. First of all, this has nothing to do with gaming. Play all those games all day long. But one of the things that, I try to focus on, and especially being in this role, I feel an incredible sense of responsibility. And so you'll sometimes see people or Web3 in general typically has this persona of there's a lot of people that just go to events. This is all about parties. This is all about, going out and shaking hands and sitting on panels. And, that does serve its space to an extent, but I think there's so many people that rely on the Hedera network. There's so many enterprises involved. There's so many individuals that believe in this project, and they have a very huge interest in where this goes. So for me personally, the reason I posted that was, I'm not a person that stays out late at night. I go to bed fairly early. I wake up at 4 a.m. I try to stay focused. I stay focused for hours upon hours a day. And I think it is because I have that really strong sense of responsibility to always make clear and right decisions for people in the community and for the governing council members, which, are obviously incredibly important to the organization. So the game playing that I typically steer away from is, the late nights and hanging out at the parties all day, and trying to be where I can do work and not sit on panels all year long, because that takes away from a lot of the actual work that needs to get done.
No, that's perfect. I mean, we have to maintain that focus. There's a lot of people that are really depending on Hedera, from enterprises to those games that you mentioned, but also the community as well. People have invested so much of their time and effort into trying to help make sure the Hedera vision comes to fruition. So finally, Charles, what are your general Hedera goals for 2024?
Yeah, I mean, 2024, we really want to see increased adoption of the network. Obviously, that comes with really good tooling, ease of use. I think, UI, UX improvements over a lot of the ecosystem projects, and a lot of them are working on it, which is really important. I think from the enterprise side, from the governing council, really seeing them dive in and actually, moving them towards getting those proof of concept projects up and built and running is really important. So having really tight communication with them and other organizations as well. There's other large industries and organizations we work with that don't necessarily sit on the governing council, but they still utilize Hedera overall. It's just making sure that they understand how to implement this into their business in a way that's safe, really effective. And, that does trickle down to the end consumer. That does trickle down to the individual, especially when you're talking about retail, loyalty, commerce. I mean, eventually, all of these things come down to the app you may have on your phone, or the loyalty program you may be a part of eventually running on Hedera could be a really great thing. So those are the kind of things that I'm focused on, is, improving UX, UI, improving those proof of concepts coming out from council members and enterprises, and really just building up the robustness of the network. And like you pointed out earlier, is getting the awareness and the communications out at a much, much larger scale.
Well, I think that's exactly what we want to hear. Charles, is there anything else you'd like to pass on before we let you go?
I'm just blown away by how powerful the community is. I mean, I've been a part, like you said, of other protocols that are out there. The minute that this community heard the position I was stepping into, it was nothing but excitement, love, support, everybody just giving ideas. And that's the thing. I mean, I do read my DMs. That's how you connected with me. You DM'd me right on X, and right away we were able to get this scheduled. So I do read them myself. I do read replies myself. So I always tell people, just keep talking. That's why I wake up early in the morning. The first couple hours of my morning before the workday starts, I make sure to engage with the community and try to make sure that communication's there. So keep it coming. I do take the feedback seriously, and if there's places I can implement, I'll do my best to implement.
Well, the Hedera community, it seems like it attracts a certain type of person, people that do research. So as soon as you were announced, they were digging into your LinkedIn and looking into your past, and they just got excited about who you were because they think it's a really good fit. But Charles, this has been an absolute pleasure. I hope we can get you back, and good luck with your endeavors.
Yeah, thanks so much. Really fun.
Great to hear Charles there again. And I think the thing that really stands out to me is, he's got this vast Web 2 experience, but also this Web 3 experience that we haven't really seen in the sort of Hedera ecosystem itself on that leadership level at that organization. And the fact that that expertise comes within the realm of marketing, I find really, really special. The issue with our council, we've got this amazing brand power, we've got this amazing collective net worth and ability to, really move markets or shape markets. But they've always been scared about the marketing side because of the repercussions of associating with things like Web3, blockchain, NFTs, so on. And so I think to have Charles as the president, who perfectly understands what we can and can't say from a marketing perspective, the boundaries we can push within the limits that are set, and to have him instill that confidence within those council members so that hopefully they feel comfortable coming out and saying, you know, we're doing this on a blockchain or a hash graph, we're doing this with Hedera and so on. I think that could be the energy that we've missed from the council. And so to have his marketing expertise there, his understanding of legal regulations, understanding of community and Web3, I think really is the perfect hire for presidency at Hedera, definitely.
Yeah, it was funny because we had a conversation because I was like, just to let you know, in our show, I'm going to be talking about DeFi. We're going to be talking about some specific tokens. Is that okay for you to be adjacent to that, you know, or to have my provocative thumbnail and things like that? He's like, and he gave me some specific advice. He knows exactly the line that you can walk to stay on the right side of regulation. So that's certainly good to hear. But yeah, I mean, he's the right man for the job, in my opinion. But speaking of tokens, our DeFi ecosystem has been taking off, and it was thanks to a few tokens. We have Saucer Swap has done, I think, a 5x just recently, and I think off the lows it's up 7x. It's gone from, I think, just a few months ago it was around 1.5 or 1.6 cents. It has gone up to 7.7 cents at the last time I looked at it. So we're looking at a solid 5x, you know, almost a 7 or 8x off the very lows. Karate Combat back in the beginning of November was down at 0.05 cents. And recently it's been bumping up against 0.4 cents. So just within a couple months, we're seeing it up 800%. So these tokens are doing really well. And it's not like what we see in some other ecosystems that are kind of leaning on meme coins and things like that. There's real businesses and value that's being created behind these tokens. And we've seen if you go look at DeFi Llama, I think at the lows, we only had $22 million total value locked. We're up at like $75 million. That's an increase of 250%. If you look at the broader DeFi space, it's only up about 44%. Now it's in the billions. It went from about 36.6 billion up to 53 billion now. We've had a pretty good run in crypto, so that would be expected. But we're certainly outpacing in the Hedera ecosystem, which I think we should. But Zep, before I go any further, what are your thoughts on what we're seeing out of our DeFi ecosystem?
You know, what I find really exciting is that this is all happening pre-Wallet Connect. So Wallet Connect is a community-led initiative to make sure that Hedera wallets can connect with Wallet Connect, which is a protocol that essentially means that we can interact within our hashpack on Uniswap or vice versa. And so it's a way of ensuring basically that there's a standard across wallets within Web3 in the same way that if a foreigner comes to London, they'll use their American Express card on their own bank within America, and it'll still work on the credit card machine, the debit card machine. You can use multiple banks and they'll all work on the same debit card machine. And so you can look at Wallet Connect kind of as that debit card machine, you know, has a standard whereby you'll realize that all of these banks or wallets can connect and interact with other ecosystems that on the DEX side have Wallet Connect supported, and on the wallet side have Wallet Connect supported. So I think when that comes out, it'll really reduce the friction of outsider participation in our source of swap economy or DeFi economy, so that if they do want to scoop up some karate or use karate on source of swap and the liquidity incentives there, they can. If they want to get into Galaxy or Source or Grelf or whatever it is, Earthlings hopefully in the future, you know, all of these different projects, it really reduces that barrier to entry. And I think we're getting liquidity in now clearly from different places, and that's prior to that. And I'm really excited for when that comes out, and hopefully it won't be too long now.
And one thing I think people get confused, you know, they see these other tokens going up and they don't think that's going to have a big impact on HBAR. And we haven't seen a huge move to this point, but in our DeFi economy, HBAR is the numeraire. It's the most liquid token within that space. And even if you were to leave our ecosystem, HBAR is still the most liquid token. So if you wanted to take profits or something like that, you're going to go to HBAR first and then go to the centralized exchanges. But again, that being the numeraire, it's the HBAR is the largest token in a lot of these different pairs. So if you're going to pair it up with Karate or you're going to pair it up with Saucer Swap to provide liquidity, that's going to lock up those HBAR. So that's going to be good for the HBAR market. But you know, we have some of these other platforms that are known for DeFi. Solana is a good example. But when you actually look at the numbers, and the best way I think to value the value of a DeFi ecosystem within one of these networks is to look at the total value locked to the market cap of the token. And right now for Hedera, the total value locked to the market cap is sitting at about 2.6%. And then you hear Solana, everybody's really excited, even though a lot of the excitement is around meme coins in that space. They're at 3%. So there's not a huge difference there. And then on top of it, you get all the other value for Hedera with supply chain and cross-border payments and gaming and a lot of the other things that are happening in our space. You almost get that stuff for free on top of it. The enterprise use cases you kind of get on for free on top of it. And then let's not forget that every time you do a smart contract call in Hedera DeFi, it's additional revenue, 5 cents of revenue for the Hedera network that can be used to incentivize token holders, incentivize nodes, and continue to build out this network. One thing before we get off DeFi, I do want to mention is we've walked through H-Suite as they've progressively gone towards completely being open. And I believe now they are completely open to the public. So if you want to go on there and provide liquidity, it is a completely new way of doing decentralized finance. They use app nets, they call them smart nodes, but it's like the original vision for Hedera that Leemon had. It's hyper efficient, hyper cheap, really fast. So I suggest everybody who is out there that's a degen, give it a shot. But Zep, before we get off DeFi, do you have any other thoughts?
What I find really exciting is that, we haven't had this energy within our DeFi ecosystem before. We've got SourceSwap who've just launched a Spanish page. They've got their Korean page. They're going multilingual. And that's because there's new users coming in from different places. And so, like we've said, we've got volume at an all-time high in terms of trading on SourceSwap. As the market, picks up, I'm sure the TVL will increase with that, as well as new liquidity comes in. But we're also not talking about the TradFi, the traditional finance that will end up in these sort of hybrid decentralized markets on Hedera. We've got Aberdeen, the biggest wealth manager, active wealth manager in the UK, who Duncan comes out, almost once a month at this point, talking about that vision whereby these markets, these tokenized securities, whatever they are, will exist on these highly liquid marketplaces ruled by smart contracts and decentralized sort of models. And so whilst we're catching up in DeFi and we've got this wind in us that we haven't had before, this wind behind us, we also know that we've got a very strong positioning for these TradFi markets when they really start to come on chain and become traded. So for me, the future of smart contracts, the future of finance on Hedera using this decentralized infrastructure is really, really promising.
Yeah, couldn't agree more. And that dovetails really well into what Shayne talked about in the recent Twitter space we had, or X space. He got into real world asset tokenization, talking about institutions, talking about banks, and so forth. So let's listen to what he has to say. Shayne, I'd like to stick with on-chain finance. Who are the key players for Hedera's real-world asset tokenization strategy, and how will they make an impact in the year to come?
So we have, keeping with the theme of institutions, one of the things that we didn't do in the first 18 months was really go to the large institutions, financial institutions, that is, the large banks, et cetera, given the gray area related to, digital assets broadly. Over the course of the last several months, as everyone knows, particularly around Bitcoin, there's been a little bit more loosening or investigation or willingness to engage by some of the largest asset managers, private equity organizations, banks in the world, a lot of which we're engaged with directly, some of which I, interestingly enough, am hearing or have investigated or are integrating Hedera, but yet the HBAR Foundation wasn't involved in that. That was an organic relationship that emerged with, the network, along with a couple of banks that come to mind. That's really, really important, because as we think about the HBAR Foundation, one of the things that we wanted to do was build awareness, right? That was what we were created for. And starting to see that awareness happen organically in an area that is really trying to be on the forefront of innovation is really important. I think there are some partnerships that we are working on that I think are very interesting. One is Oasis Pro. I think that they are a great organization led by a founder, longtime person in Wall Street and finance that I think is doing a lot of interesting things around tokenization, around so many areas of this complex environment of how you get tokens on chain, track them and settlement and do all of the things that you need to do in this decentralized environment. I think that they're going to be important to us, in the future. I think a lot of the organizations we're talking to, and I don't want to name them, but I bet you if you sat and went, who are the top 5 organizations that, I would say are in finance, we're having some level of discussion with them in the hopes that, as they continue to explore tokenization, some of them already have tokens of their own that they're wanting to try to figure out how we collaborate. So to me, it's still early days because these conversations, while are certainly moving forward, there you can tell that it's the innovation side of the bank that continues to investigate this. And for those that haven't necessarily dealt with Wall Street before, a lot of the banks, in fact, most of them have not only an innovation agenda, but a budget. So they've got an entire team in IT that most banks own just about every software solution that you can think of in almost every vertical. They will spend money because they want to kick the tires. They want to look at it. They want to touch it and understand what value it might be able to bring to the business. And so it's those teams that we're, engaged with. And I think it'll be interesting as they begin to bring the business in, begin to understand real world asset tokenization, what is important. The area that we have seen to be the most important to them is settlement, largely because when you're talking about hundreds of billions of dollars, in some cases trillions of dollars, 2 basis points is a lot. It's a lot of money to give up in a settlement transaction. And so they're trying to figure out how to optimize that part of their value chain. And can Hedera be a part of that? We certainly have organizations like Red Swan and others that are tokenizing real world assets like real estate, and Aberdeen's doing it with their money market funds and their real estate fund, et cetera. We're going to continue to see that. So this is an area in 2024 we're going to lean in, and we're going to create partnerships like Oasis Pro and others that are going to help us lead from the front.
Shayne, we have good representation both from banks and asset managers, and of course there's some overlap there. But we have banks like Nomura and Standard Bank, Shinhan Bank, and then we have asset managers like Aberdeen that you mentioned and Kafra. But there's a lot bigger fish out there as well. We have Fidelity and Vanguard and BlackRock. Where are you seeing more attention? I know this answer is probably going to be both, but where are you seeing more attention, from the asset managers or from the banking and banking services?
For us, it's been equal. The names that you listed, some are on the council. There's not a single U.S. entity on the council that's financially oriented, right? So there's no Nomura, in Japan, Shinhan Bank in Korea, Standard Bank in South Africa, et cetera, et cetera. Aberdeen's out of the UK. And so where we are starting to see a lot more conversations is in the U.S. market, and that's exciting. But because of the lack of regulatory clarity, certainly have a lot of people in these conversations, they're moving slower in terms of action, because they want to understand how are they going to be able to use this being, the Hedera network in a way that doesn't triple wire, which is why I think they're focused a lot on settlement. That's really a back office function. So if they could use the capabilities of Hedera to save money, right? So oftentimes these big organizations, whether it's institutions or enterprises, you either have to help them generate more revenue or you have to help them cut costs, right? And so can we help them automate, optimize, do the things necessary in the back office so that now all of a sudden what was billions of dollars in spend or cost for them is now a fraction of what it used to be. And so we're seeing a lot of the U.S. institutions, having these conversations, and I hope it continues throughout 2024.
So, Zeb, I was really excited to hear how Shayne was talking about, he wasn't giving specific names, but he was talking about the fact that they're talking to the biggest names in finance in the United States, and that they're already organically considering Hedera and integration with HBAR and everything else. Do you have any additional thoughts?
Yeah, so Shayne briefly mentioned Oasis Pro, and looking at Oasis Pro, they're the first US regulated alternative trading system. And when you take into consideration that we also have RCAX, who are one of the only, if not the only, FCA regulated digital asset exchange in the UK, it seems that Hedera really has a strong position within this regulatory first market. So obviously this is the first we've heard of it publicly. Hopefully there'll be more to come in the short term, and we'll learn more about Hedera's positioning within those regulated markets.
And that's exactly what you would expect. And we also have Toko working in the Middle East doing the exact same thing with Vara. And Zeb, without further ado, I do want to get into Shark Bites. We got some great questions from the community this week. And as always, Rob has some great insights. So let's check it out. Rob, welcome back and Happy New Year.
Happy New Year, Brandon, and everyone else. Looking forward to 2024. It's going to be a big one.
Yeah. I had so much fun with the conversation we had last week, but we have some great questions for this week as well. We're going to start off with HBAR for Life, who was referring to the EDF IREC use case that you were talking about last week. He says, I know it's a silly thing to ask, but can Hedera really handle that kind of volume? I just want to hear it from you, Brandon. So what Rob is talking about is that volume would come from a single use case. How far away are we from that coming online? Now, the first thing I want to say, just to clarify a little bit, Rob was talking about a use case from EDF, which is one of Hedera's governing council members, and they had a proof of concept that they just had coming out. And he was going off of numbers that are projected for out in 2030 for this market. He did some back of the napkin math and came up with anywhere between 50 and 160,000 transactions per second. Yes, for this one single use case. And I guess the question here is, can the Hedera network handle it? Well, right now, Hedera has one shard, and we have a throttle in at 10,000 transactions per second. So 50 or 100,000 transactions per second might be a little bit much. Even if we lifted the throttle, we can handle many tens of thousands of transactions per second, but maybe not into the range that we're talking about here. But if we look out at 2030, we could have multiple shards. We'll say there's 20 shards by then, and each of those shards has 40 nodes per shard, and that would be 800 nodes. And that's kind of where I think we could be by that point. And we'll say we've lifted that artificial limit to 20,000 transactions per second per shard. That means we'd be able to handle about 400,000 transactions per second. So even if this single use case was doing, say, 90,000 transactions per second, and we were to have, we'll say, at my O doing, 12 or 15,000 transactions per second, and a Internet of Things use case like Neuron doing several thousand transactions per second, Flutterwave doing thousands of transactions per second. We could only be doing, 200,000 transactions per second, which of course is a huge number, but we would be able to handle it if we had that many shards. But Rob, this was a use case that you were pretty passionate about. What are your thoughts on this?
Well, you answered my question. Thank you. There's a couple of other things. So yes, 160,000 was kind of really at the top end, and it was based on, as you say, my napkin math, which my daughter tells me isn't particularly accurate, but it's in a range, right? So it's 50 to 160, I think is an acceptable range. And that was the target addressable market. So that's assuming that all renewable energy certificates were tokenized on Hedera, which isn't too far, outside of what I expect to happen in that 2030 timeframe. However, as you say, during that time frame, there'll be many other high throughput use cases coming to Hedera as well. So there are a few things that need to happen. You quite rightly pointed out some of the shard dynamics that need to be in place. We don't know at the moment whether that's 40 nodes a shard or 100 nodes a shard, or what the thresholds are. We don't really know at the moment what the revenue growth needs to be to support that network. But we know that the technology will over time be developed in order that can happen. And there's a couple of other things that need to happen, of course, prior to all those things happening as well. Firstly, it's community nodes. And community nodes are necessary, obviously, because then we go beyond the 39 nodes of the ultimate of the governing council, and state proofs. And state proofs are the things that enable us to ensure consensus across all shards. Those two things are on the roadmap, and we talk about community nodes, and we've got some more questions about those later. So we've got a technical strategy to address massive throughput, and 160,000 won't be the only use case on this network, obviously, by 2030. So I'm slightly mischievous in terms of throwing out the big numbers, but actually it's generated a lot of conversation and contemplation about what that might look like, and we're pretty confident that yes, within a couple of years we'll be able to support massive throughput like that.
And I think we're going to get them. All right, so the next one comes from HBAR $10, who says, in 2023, we saw the first major Hedera application Atma.io go live, and then consistently scale up transactions throughout the year. Can you share any major takeaways or things you've learned throughout the year as the first Hedera app started doing thousands of transactions per second?
Well, we loved it, didn't we? And we still love it. Everyone looks at how many billions of transactions, of real world transactions, are done, every few days. So I think the first learning was, we back our technology. We have, that belief. We believed beforehand, but we didn't have the evidence, and now we have that evidence, and it's relentless, month-on-month growth as we ramp up that particular use case, and as Atma.io does that for us. It also makes it easy to have the high throughput conversations with other enterprise use cases, other big users of the network who are seeking to do something similar, or have non-functional requirements around scale and throughput that they need to address. And that actually changes the narrative, because there's still this kind of blockchain narrative in people's heads that is first and second generation blockchain, and not third generation DLT. So being able to point to these metrics, live metrics, given the explorers and the dashboards that we now have, changes that narrative, and it enables us to actually then move beyond that and talk about the use cases themselves. We've also seen a lot of the other layer ones and layer twos trying to steal our clothes on this as well. And this will happen, and it will continue to happen, because it's actually such a massive constraint on those first generation blockchains. But they're always sidechain related, or layer twos, or some other compromise that is necessary in order that they can scale. And so our narrative is and can always be, well, this is inherent in our network. So, we are able to demonstrate that we haven't needed to build scalability solutions or off-chain or layer 2 solutions in order to achieve this. This is just how it was always designed to be. And as we grow, we're not stagnating either, of course. We're growing month on month, and we're showing more and more growth. That kind of helps that those discussion points that we're talking about. And I think as some of these other chains race to catch up with us, or race to focus on this particular breaking this particular constraint, some will fail. I think the fragility will cause some of these very popular blockchains to expose the real frailties in the architectures. So while that's not a learning, it gives us additional confidence when we're talking to enterprise and other users of the platform. And finally, and it's a small thing, but it's actually quite a good learning. And this is about naming, right? The Hedera consensus service is the native service that drives a lot of this throughput. And people misinterpret, sometimes deliberately, what consensus means, right? And I don't think we're going to change that name now, so we've got to get used to it. But it just goes to show that, success will attract the trolls. It'll attract the deliberate misinterpretations of what you're using and what you're doing, but that's an opportunity as well, because it gives us the opportunity to then say, well, these are real world transactions, and this is why they're real world transactions, and dig a bit deeper. So every opportunity to engage, whether it be with trolls or just curious, newbies, gives us the ability to kind of up the narrative game and win some more fans.
Absolutely. And that actually dovetails into the next question. So Wade S says, Brandon, minute 49, you said possibly some other networks might struggle and maybe catapult Hedera where it should be. What did you mean by that? Now, this was a conversation we were having last week. We went through all of 2023 and we were looking ahead to 2024. And what I was looking forward to is all of these networks getting tested, because I believe that Hedera will shine. And you kind of went through that when some of these other networks might get pushed and tested, that they might have some issues. And, a developer that's, say, working on Avalanche that sees the fees go up to $500 per transaction, that's just not sustainable for that kind of a use case. They may start looking elsewhere. They may say, hey, what's Hedera doing? Maybe I could move over there. So that could add to additional developers working on our network. That could add to additional mind share, thinking about Hedera. And of course, we talk about market cap as well. So that could get impacted as well. So that was Wade's question.
So, and the other thing about that is because we have full EVM compatibility now. So these other EVM networks, it makes it very easy for them to migrate to port their smart contracts and the development they've done over onto Hedera. This was a really prescient thing that the Swells Labs teams and Mats and Leemon did from the earliest days. And some of the kind of the unexpected hard and heavy lifting work that has been done over the course of 2023 is really to bring this EVM compliance, EVM interoperability into the position where we can attract those developers. It's hard to go to another chain like Cardano or to Solana, which don't have the EVMs. But if you've got a straight migration, then it's easier to capture that the developer communities, and we're well set up for that.
And we've seen a lot of developers already move over and start to build their projects on Hedera, and they're very happy with it from what I've heard to this point. So these next three questions, actually, they can be taken together as they're all related to Hedera council member term limits. So Gerald asked, could Rob comment on the significance and mechanics of the upcoming first term expirations of several governing council members? Is there a chance that old council members will leave before new ones are added, actually decreasing the council numbers? HBAR for Life asks, could Hedera Governing Council Board renegotiate the length of terms which the governing council members signed up for initially? And this last one, they must have taken down their comment, but I grabbed it anyway. It's from DataWelt, who asks, given all council member spaces are not yet filled and the date to renew or leave the council is approaching, is there a possibility the duration for each tenure is extended? It would be unfortunate to lose the likes of Google before Hedera has realized its potential. So what are your thoughts on this one, Rob?
All of the answers to these excellent questions are in the Hedera LLC agreement, which is in the public domain, and you can see it on the website. But the short answers are, well, let me read some of the terms that are actually relevant here. So in the LLC agreement, our renewal terms says that at the end of a governing member's first term, such governing member shall automatically be nominated for a subsequent 3-year term, and the approval of at least 2/3 of the governing council members shall be necessary to approve that renewal term. So that automatic resubmission means that governing council members don't fall off the council by mistake, or that they're in a process for that second term. Now, of course, when we have a full governing council, and we have a strong pipeline with enterprises, knocking on the door to join, then the vote of 2/3 of the governing council that are sitting at that time will be very different from what it is now, when there are still 10 seats to fill. So no one has to worry about the mistaken falling off of the governing council or the loss of governing council members. There is a clause called for cause removal and termination of interests, and in that clause, if there is just cause for through whatever reason, for a governing council member to be removed from the governing council, then the board can recommend that, and that member will be subject to a retention vote. And so the retention vote of the governing council, again, needs 2/3 of the members. So the board can recommend that the governing council member should be removed, but the council as a whole votes, and 2/3 votes are required, again, to retain or remove that governing council member. And then finally, any governing council member can withdraw from the council at any time with 30 days notice. This has only ever happened once. That was Swisscom Blockchain, when Swisscom shut down their blockchain team, and so didn't have any purpose staying on the council. What we would also maybe see is that as regulatory and jurisdictional rules start becoming clearer, it may be harder for some of the governing council members within their jurisdiction to stay on the governing council. We haven't seen that yet. I personally think the direction of travel is in the opposite direction. But there is a clause in the LLC agreement that allows for withdrawal, both because that council member chooses to, or in the interests of if they violate applicable laws, they can withdraw with the immediate effect. So all of that is to say, and in answer to the question, we have 13 of the governing council members up for renewal within the time frame. The council votes on that, and a vote has taken place and will be published in the minutes when they next come out.
Now, Rob, I believe that since we first started adding council members in 2019, the full 6-year 2 terms will start to roll off in the beginning of 2025. And then we have 3 then in February, I believe, of 2025, 3 then in September of 2025, and then Google in February of 2026. So we do have a fair amount of time before that comes to fruition. And Shayne, the CEO of the HBAR Foundation, mentioned that he thinks we're going to fill a fair amount of the seats this year. So we have some bright spots.
Yeah, Shayne's very optimistic on that. Yeah, I'd like as I've said before, the Memcom list of pipeline is really strong. We've got some very near, and we've got some excellent candidates, and 10 in the next year, I think may be achievable, but 5 certainly I would think is almost certain.
There you go. Well, time will tell. The next one we have comes from Jordan Wallet, who asks, correct me if I'm wrong, but to have community nodes, doesn't it mean we'll have a full governing council beforehand? So we can expect about 10 announcements over the next year. So I think there's some misconceptions here. First of all, we don't have to have a full governing council before we can start adding community nodes. And I would actually expect that we might have community nodes before we do have a full council. But then there's the other question that we kind of just answered already around the 10 additional governing council members within the next year. But Rob, do you have any additional thoughts or comments?
Yeah, no, just that. I think that there is no technical dependency on the governing council being filled before community nodes being launched. I think it'll probably happen in the same time frame, to be honest. As we fill the governing council over the course of the next, let's say, 18 months rather than Shayne's year, and the community nodes tooling and hosting and commercialization and all the things that need to be wrapped around the ability to launch a community node, they get delivered up by Swirlds Labs over the course of this year. So within a similar time frame, there'll be an overlap. But I certainly expect to see the first handful of community nodes being launched prior to the final governing council member being appointed.
All right, understood. So then we have two from our friend Dumb Kid. The first one says, once decentralization does happen, will the importance of governing council nodes come down, or will they be a little superior to permissionless nodes on voting consensus? So I think this is a pretty easy answer here, Rob. What do you got?
Yeah, no, there's no superiority. All of the nodes will be equal. Of course, the governing council will still be there. They'll still be hosting nodes. So you can kind of imagine this as the core network that will never go down, whereas community nodes kind of will come and go. I expect there to be more arriving than leaving, but you never know. That flux is just Web3. The governing council will remain. There's no superiority there. The council itself may or may not vote to continue to stake the unallocated treasury to the council nodes themselves. I suspect that will be the case. As we know, there's a threshold of HBAR that's required to make a node kind of viable and live. So I think that's probably the only specific nature of the council nodes. But actually, no. This is why we've spent so much time making sure that community nodes, once they're launch properly, because once they're in the wild, they're out there, right? So we have to be able to manage them appropriately. And of course, to start with, they'll be whitelisted anyway. So there'll be a certain amount of hand-holding as we kind of move this kind of relentless march towards decentralization. But yeah, the FPOS node will be no more superior than the Twigital node.
There you go. And we have one last one from Dumb Kid who asks, whatever happened to ServiceNow and AdsDAX? Now, these are two very different entities, but Rob, what are your comments on this one?
Yeah. So whatever happened? Well, where have you been, Dumb Kid? There's ServiceNow is one of the most active of the governing council members. They joined in 2021, and their Now platform, they're a big enterprise business process platform that enables digital transformation to occur very easily. And they have a platform called Now, which is integrated with Hedera. You can go on YouTube or on LinkedIn and search for what ServiceNow have done with Hedera. Nicola Attica is the global head of blockchain and innovation, I believe, and he is very proactive and vocal about what they're doing. We've also got Tasker Generis, who's ServiceNow's governing council rep, who's actually also a board director, so he's very active on the board. Shushi Ran, who is co-chair of the Marcom, the marketing committee. So they're very involved and doing lots of things. They went to COP28 because a lot of the innovations they built into the Now platform are ESG related and integrated with Guardian. So they've definitely drunk all the HBAR Kool-Aid. And AdsDAX is one of our favorite OG businesses. It's the business that drove the early stage throughput pre-Atma.io. And AdsDAX are actually part of Yamgo. So you may have heard of Yamgo. It's a rewards platform and wallet. And AdsDAX and other parts of that portfolio of companies are all within the Yamgo group. So yes, still very active, and I suspect, I haven't looked at it in much detail, but I suspect the parts of AdsDAX kind of roll up into the Yamgo experience because they're very similar. So yeah, they're still live kicking and driving growth on the Hedera network.
Yeah, I know during the pandemic with some of the financial impacts, AdsDAX kind of rolled off for a little bit, but I know they are still very involved. That team's very involved, and hopefully that use case will start to spike up again pretty soon. So, Rob, that's all we have. This is a pretty short one this week, but that's all we have this week. I want everybody to keep having those questions come in. We're building up our queue, and we're going to keep knocking them out every single week. We appreciate everybody's time, and Rob, I appreciate your time, and we'll see you next week.
Thanks, Brandon, and Happy New Year to all the HBARbarians out there.
So we always love hearing from Rob and keep those questions coming in. Now, we've also got something on the central banking front from the Bank of Ghana. We've been talking about that in recent weeks, but we got a little bit more information. What do you have for us on that, Zep?
So the Bank of Ghana put out the photos from their ECD hackathon, which, as we know, was built on Hedera as a public network and led by MTech through their CBDC innovation kits. So we don't have any information, as I understand, yet on who the winners actually are, but we know that that's been ramped up, and we know that, like we said, a central bank, the Bank of Ghana, has concluding its testing on Hedera as a public as opposed to a private blockchain. And I'm sure we'll learn more about the results and their vision for the e-city moving forwards.
Yeah, MTech is not playing around. They're starting with these smaller central banks, but I think that's a great proof of concept for larger economies as well. All right, so the next thing we have, and of course, AI has been really hot lately. We actually have some NFTs that have been created with AI, but Leemon put out a paper on it. So in the article, he opens up by saying there's currently great interest and excitement about artificial intelligence and machine learning. There's also great interest and excitement about blockchain and distributed ledger technology. Do these two fields have any overlap? Is there any way in which they are related and can be combined? Yes. There are several ways in which AI can be used to help DLT and several ways in which DLT can be used to help AI. AI can help ledger security, development efficiency, and ease of use. And DLT can help AI by managing training data provenance, training data permissions, and micropayment royalties to training data owners. And Zep, I really like that last concept. Of course, there's the issue of dragging the internet and taking potential IP that has been created by others. So this could be solved when those different pieces of content are tapped into. The content creator could be paid. And that could all be automated through smart contracts as soon as AI uses them. So that's something that I think could be really interesting. Do you have any thoughts on this article that came out late in December?
To me, given Leemon's background in both AI and obviously the inventor of the hash graph, I'd love to see more of this sort of crossover in development. It seems to me like the Hedera consensus surface is almost purpose-built for this kind of data integrity, for things like large language models or whatever iteration of AI is being used. And so when you have something like the internet, which of course is becoming more and more dominated by AI, and then you have that original view of Hedera as the trust layer of the internet, it seems to me that in an AI-dominated internet, the value of Hedera as that trust layer becomes even more valuable. So I hope that this is, one of many thought leadership pieces to come, but also the start of perhaps developments in this kind of area of DLT.
Exciting times for sure. And with that, let's get into some network analysis. So Zeb, we are in one of those lulls. I think right now Atmio is down to 0 while they reset some things. Now we do know that every time we've gone through one of these lulls, it comes back even higher. So before we were averaging close to 3,000 transactions per second. At times it was well over 3,000 transactions per second. So I expect it to come back even stronger. As I mentioned, I think Atmio is completely offline right now. I know people are frustrated. We only have about 20 transactions per second going, but this is something that Rob talked about, that when the tide goes out, we see what's going on in the background. Now, before we had Atmio launch, we were usually getting anywhere between 5-6 transactions per second. So we have seen a 400% increase in everything except for Atmio. So that's certainly good to see. Still, over the past day, we had a max TPS of about 1,000 transactions per second. And because we have less throughput, our time to consensus finality has come down even more. We see it down to 3.37 seconds. Now, that's not too much different than when we're cruising along at 3,000 transactions per second. It usually gets up to about 3.5 seconds. So not a huge difference there, but a slight improvement. And over the past week, we've created 12,500 new accounts. And moving down and looking at our fungible tokens, wrapped HBAR is in the top spot, followed by Sauce and the meme coin Lucky. We also have both the native and bridged versions of USDC in the top 10. In the 5th and 6th spots, we have Energy Trade token and the meme coin Zero, and also the token that allows single-sided staking of Saucer Swap's native token Sauce called XSauce. And to round out the top 10, we have Dovu and HSuite. Our NFT front is dominated by Rant CPU NFTs, which I believe are a marketing campaign done by Lithos, and they have some pretty cool stuff. So let's take a look at some of those cards.
Are you excited for Fast and Furious 17? I still know what you did last Furious.
Is Facebook ruining your life? No worries. There's a support group for that on Facebook.
Y'all think my son's laptop is crazy? You should see what's on my laptop.
The only word to describe this moment is kofefi.
Next up, we have the Liquidity Provider NFT from Saucer Swap, the mobile game Slime World NFT, a Karate Combat themed Karateka NFT, the Times, and the Hashgraph naming service to round out that top 10. So Zeb, do you have any additional thoughts on NFTs?
Yeah, so late December we saw that Doctor Who Worlds Apart, which is the BBC licensed video game coming out very soon, as I understand, has just minted over 1 million NFTs on Hedera in roughly 60 hours. So that's a lot of revenue coming in, but that's also a testament to our throughput and the fact that big brands like the BBC, a massive brand in the UK, the state news channel, is confident enough to use the Hedera network. And as we've seen, this is what it's all about. This is what the governing council is all about, is instilling that confidence in large-scale organizations, institutions, so that they feel they can enter the world of blockchain without the risks that they see every day in the news. And so for me, that's a massive game that's going to be coming out, clearly with a massive fan base. I don't know how big Doctor Who is in the US, but in the UK it's a cult classic, and it's just had a revamp through a lot of new investment. So to me, that could be sort of the perfect storm for a game to emerge on Hedera at this point in time. And I'm sure we'll be learning more about that in the coming month or so.
Absolutely. And we also saw something come out from Patches as well.
Yeah, so Patches, I couldn't be more excited, I don't think, about both him and Charles as stepping into these roles within Hedera affiliated organizations. And so already hot off the press, Patches has come out with something called Hashionals, which uses what he calls the HCS20 standard, and it's essentially auditable point standard that uses Hedera. And I haven't done enough digging into it quite yet, but I will read out what he's put on the infographic. So it reads HCS20, the auditable point standard. The HCS20 standard on Hedera offers significant benefits for applications that manage point systems. So the first benefit is transparency and auditability. Every transaction, meaning mint, burn, transfer, is recorded on Hedera, creating an audit trail to show that these events happened exactly when they did. Alongside that, because Hedera is so efficient, it means that it's a very cost-effective solution for any application that wants to use this point system or to have this verification system within their application. Alongside that, he said it's very versatile, meaning that it's suitable for various applications, from loyalty programs, which we've talked a lot about recently, to gaming points, to public mints, and I'm sure that can carry on into the sustainability ecosystem, with Matt Smithies actually briefly touching on that earlier. And lastly, he says that the flexibility and control of this new HCS20 standard is one of the biggest features, which means that depending on the mode, it can be adapted both for private control or public transparency. So, of course, we know some of the bigger institutions have hesitations with putting everything on a public network. So it seems that this flexibility in both a private rendition or a public rendition of this point standard would be crucial for anyone, or crucial rather for the accessibility for anyone to use this standard. So again, I haven't done enough digging into it today. I saw it very briefly this morning, but I'm sure we'll cover this more in the future. And I know that the fact that Patch is behind this, pushing it, it's a serious big brain innovation. So excited to see where he takes us with it.
Yeah, I say this on a regular basis for different entities that we have in our space. We have Rob Allen, an absolute force. I think Charles is going to be a force, and Patches as well. All right, so with that, let's go ahead and get into some DeFi. Taking a look at DeFi Llama, not including state or liquid staking, the TVL for the Hedera DeFi ecosystem has come off its high a bit to $72.5 million. A whopping $68.7 million of that is on Saucer Swap, making them the clear DeFi champion so far. And we have HeliSwap making up most of the balance. I'm not sure why H-Suite isn't represented. I'm guessing it's because they don't use smart contracts and DeFi Llama isn't set up for this new kind of DEX, but I'll check with the team. Taking a look at some of the staking rewards on Saucer Swap's popular trading pairs, HBAR X V1 is at 4.3%, HBAR Sauce V1 is at 21%, V2 is at 86%, HBAR USDC V1 is at 33%, and V2 is at 97%. Over on the HBAR Karate pair, the return is 59%. Over on HeliSwap, HBAR Heli is at 148%, 23% on HBAR USDC, and 49% on HBAR Karate. Moving over to the HBAR and crypto markets, Bitcoin is down 2% on the day, but up nearly 4% on the week. That said, the alts have had a rough day. The last market update I did was nearly a month ago, and at that time, HBAR was at 8.2 cents, though we went up and tested 10 cents just a few days ago. Since then, we've had a pretty big pullback and currently sit back where we were about a month ago at 8.3 cents. HBAR is down 7% on the day and the week, but that's not out of the norm for altcoins today, with Solana being off 8%, Avalanche being down 9%, Polygon 6%, and Algorand 7.5%. We should be in an area of support around 8 cents, and if we head back north, 9.2 cents might offer some resistance, but the big number to break will be 10 cents. And if we manage to do that, there should be clear skies for a while. All right, Zeb, that's pretty much all we have. Is there anything else you'd like to pass on?
Yeah, I mean, the most exciting thing to me this week, beyond seeing Charles take the seat there in the interview, is definitely the energy in the DeFi ecosystem. And that's because we haven't seen this yet. You know, the HBAR token itself is still at roughly, 8.5 cents. So if we were at all-time highs now on that token as we were, previously, the TVL on Hedera would be massive. The fact that we have come this far in our TVL rather, still with a token that isn't anywhere near all-time highs, but that a lot of this energy is also coming from our underlying token economy within the Hedera token service, really, really bodes well, I think, for this market as it picks up, and is a massive testament to the teams within those HTS economies like Karate, Galaxy, Source, Grelf, so on and so forth, but also SourceSwap and our DEXs. I couldn't be more excited about what DeFi is shaping up to be on Hedera at the moment, and I know that having the teams we do, having the affiliate organizations that we have within the ecosystem, this really could be sort of the perfect trajectory emerging for SourceSwap and DeFi to really finally take off on Hedera.
Yeah, couldn't agree more. There's one thing, and of course this isn't financial advice, but I think people forget in our DeFi ecosystem. So right now I have a lot of my DeFi working with a pair between HBAR and USDC. The issue with that is in a bull market, if the HBAR price goes up significantly, you can end up with all USDC. But I'm actually going through a little bit of a shift right now and shifting and taking that cash and actually pairing HBAR and Bitcoin, because I think with the ETF, there might be a dip. We talk about the buy the rumor, sell the fact. I think there could be some of that dynamic, but I think people are underestimating the demand that we could see for Bitcoin. I think that Coinbase is a good proxy for Bitcoin in their traditional space, and that's gone up 5x off its lows to the recent highs. Bitcoin has only done a 3x. So I think really in traditional markets, they really want Bitcoin. Coinbase is a great company, but I think they actually want to get their hands on Bitcoin for diversification. So I'm slowly making that shift. I think next week I might make that shift a little bit faster. Again, not financial advice. Talking about DeFi, I'm also trying to get SaucerSwap on to talk about their V2 and answer some questions we're getting from the community. Next week, we're also going to do an X Space on preview for Davos. Davos, I think, is going to be really big for Hedera. We always think about refi when we think about Davos, but I think real-world asset tokenization is also going to be a big theme there. So we're going to get some key players on, I think, Tuesday at 11 a.m. Eastern. So certainly check in for that. Drop your questions down below for Rob. That's all we got. We'll see you next week.